Get to Phil LeBeau for the numbers. Hey, Phil.
Hey, Joe, this is a miss on the top and the bottom line from Boeing. A loss of 37 cents a share. That is wider than what the street was expecting. A loss of 14 cents a share. Revenue coming in just shy of estimates, coming in at $16.68 billion. The street was expecting $17.57 billion. Why the miss from Boeing? The company says a couple of things. Volumes in general on the defense side of the business, lower than expected, and two charges in the defense business, one for the MQ-25 unmanned refueler as well as the Starliner. Those total $240 million. A couple of interesting notes, though. There are some positives within this quarter for Boeing. It's the first quarter without an abnormal production charge for the 737 MAX. Also, operating cash flow positive, $81 million. The street was expecting negative operating cash flow. Free cash flow, however, still remains negative at $182 million. The company has increased 737 MAX production up to 31 per month. But when you talk with Dave Calhoun, and we'll be talking with him in a little bit, he says the supply chain, it remains challenging. And that's one of the issues facing the company in the second half of this year. The backlog, by the way, $372 billion, including over 4,200 aircraft. Coming up on Squawk on the Street at 9 a.m. You do not want to miss this interview with Dave Calhoun, CEO of Boeing. We'll be talking with him exclusively about these results. Again, this is a miss on the top and the bottom line from Boeing, with the company reporting a loss of 37 cents a share compared to the expectation of a loss of 14 cents a share.
Phil,
Guys,
I'll say there's some positives in there. Stock's now up 4%. When I hear Boeing...
The cash flow numbers, Joe. The cash flow numbers are better than expected.
What about supply chain? I think with Boeing, maybe things take so long anyway. I mean, some companies, if there's a 3-month delay, it's like the end of the world. How long does it take to build one of those unbelievable machines, Phil? But did they mention that there's still problems?
Well, the issue, Joe, becomes the Tier 2 and Tier 3 suppliers. A couple of things. One, a lot of them are struggling with the manpower, skilled labor. That's a real issue within manufacturing. And the second issue is the chain is not consistent. And that means either it's raw materials or it's components. It's not consistent anywhere in the manufacturing complex right now, and especially Boeing is noticing that, especially when they deal with their suppliers. Now, they're still able to build 31 MAXs per month, but it may be where you see some months where it's a little more than 31, some months a little fewer than 31. Overall, they're going to net out at 31 per month for the remainder of this year. And when I've brought it up to people, hey, do you think you can increase production? Not right now. That's just not happening with the way the supply chain is. I think perhaps 6 months or a year down the road, and we'll talk to Dave Calhoun about this, maybe that changes. But right now, no, it is a tenuous supply chain.